Well, after quite some time, Howard Marks of Oaktree Capital has written a memo, and this is something that investors and market participants look forward to with quite a bit of anticipation, because he always tackles a very interesting topic and gives advice on how exactly long-term equity investors should change their strategy. Now, in this particular edition or this particular memo, Howard Marks has tackled the topic of inflation. In fact, he speaks about the entire macro environment and how exactly investors should navigate these tricky times. However, at the start of this particular memo, Howard Marks clearly mentions that at Oaktree Capital, they typically tend to approach macro forecasts with a high degree of skepticism. In fact, he says Oaktree doesn't base investment decisions on macro forecasts, and they also say that they remain convinced that the macro future isn't something that can be predicted with a high degree of certainty. Now, why have he written this particular memo then? The main reason is that he believes that inflation is on the rise. There is empirical evidence that inflation has come in and has creeped into asset prices, and that is why he believes that it is important for investors to take note. He says that macro considerations are rising, centering on the subject of inflation. He says that there have been significant moves made by the Federal Reserve, the Treasury, as well as Congress. All of them have used various methods to inject the economy with a lot of money and have helped revive the economy. In fact, he says that 2020 was the year the word trillions came into everyday parlance. In fact, what he is also saying is that the money flow has stabilized, supported, and stimulated the overall economy and financial markets. Now, also what he is saying is that as far as the policy measures are concerned, the impact that it has had on asset prices has actually led to a stronger economy, higher corporate profits, a tighter labor market, increase at the rate in which the prices of goods rise. That is, he's saying that inflation has increased. He's also said that the Federal Reserve would be forced to go ahead and tighten monetary policy to fight inflation. This has resulted in higher interest rates in the future. Now, what he is saying, as far as investors are concerned, that inflation and impact on investors constitute important wild cards as far as the investing community is concerned. He's saying, at the same time, it's unrealistic to expect all parts of global economy to immediately resume efficient functioning. Now, what he is saying, the theme thus far in 2021 has been rising inflation. At the same time, he says the stock market has been worried about rising inflation rates. However, the bond market and gold prices indicate that they are quite certain that the benign inflation rate is something that they feel could actually continue going forward. He's saying investors need not worry too much about inflation. They should take note of what is happening, but need not invert their asset allocation strategies significantly in order to combat inflation.